Hey, welcome back. Today we're talking about Investor Magnet, a beginner's guide to private capital. So one of the questions newer real estate investors quite often ask me is, Dave, how can I raise capital from the get-go? How can I do my first deal using OPM, other people's money, right? Because a lot of people want to get involved in real estate investing, but not everybody has $50,000, $75,000, $100,000 for a down payment, renovation costs, etc. for their first deal. How do we get rolling without a track record? How do we bring on investors without that experience ahead of us? So we're going to walk through that. I'm going to give you 5 different big tips and ideas to make that happen. Stay tuned. All right, first things first, I got to just be completely upfront with you. Raising capital without any track record is possible, but it's not easy. Right? We just got to be realistic. Why would people invest with you if you've got no experience? Why would somebody risk $50,000, $75,000, $100,000 with you in a real estate deal if you don't really have proof of concept? So you got to have that front of mind. It is possible, and I'm going to share some ideas with you here on how to do that, but I want you to go in with realistic expectations. All right? So here's the first of my tips. If at all possible, self-finance your first deal. Sometimes I have people that would just rather prefer not to use their own capital in their first deal. They hear the whole OPM thing. They like the idea of leveraging other people's money. They'd rather not have their own money invested in the deal. And guess what? I get that. But for your first deal, I highly recommend you self-finance wherever possible. Even if that means you have to do a home equity line of credit from your own personal residence to come up with the capital, self-finance your first deal wherever possible. Now, maybe it is a case where you do have some capital, maybe you've got all the capital to do a deal, but you're not very confident about doing a deal by yourself. If that's the case, then partner up with somebody else who's already doing the kind of deals that you want to do. Do what I call a pay-to-play model. So you join forces with an active real estate investor who's already got a track record, who's already got the power team, who knows what they're doing. But here's the deal. Tell them that you want to actively participate. You don't want to just be a passive investor. You want to learn on the job, so to speak. So you invest your money with them. Maybe you're financing the whole thing, you're financing part of it, and you're actively participating in the deal so that you can learn from it. So the big advantage there is all you have to do is one of these kind of deals, and now you've got proof of concept. Now you've got an example deal that you can point to and say, hey, here's the deal that I was involved in. Here's how it worked, and you can use that to leverage and bring on investors for your future deal. Another big advantage is this is a great shortcut to that active investor's power team. Now you don't have to figure out who to use as your realtor, as your accountant, as your bookkeeper, as your renovator, as your contractor. You've got that power team already created. That is a massive shortcut for you, and it just really expedites the whole raising capital side of things. All right, let's say you don't want to join forces with an active investor. You've got some capital, but not all of the capital. Another thing that you could do is you could put in some of your money into the deal, bring on investors to put in the rest of the money, and share the profits, even though you're doing all of the work. That's fine, right? Because you've got skin in the game. You're showing that you're serious about this. You're going to do all of the work. Now, you're going to be a little bit more generous with them because you're going to be splitting the profits with whatever way that goes with the capital put into the deal. But this is a way to show your prospective investors that you're serious and kind of assuage or allay their fears about you not having any skin in the game. You've got your own money in the deal. You're bringing their money into the deal. You really are motivated to make sure that the deal works so that you get your investment back out, they get their investment back out, and it's profitable for both of you. So that's another way to do it, is join forces, your capital and your investor's capital. Another big idea is if you don't have any money, but you want to get going with a deal, is to put in sweat equity into somebody else's deal. So this is kind of like that second recommendation I gave you where, invest your capital in somebody else's deal and learn as you go. But this time, instead of investing your capital, you're going to invest your sweat. You're going to invest your expertise. You're going to invest your efforts, right? So if you absolutely have no money, hopefully you've got some time, you've got some skills, you've got some benefit to bring to the table. Offer that to a partner, say to an active investor. Say, hey, you know what? I really want to learn how this works. I'm willing to work for you for free in exchange for the experience and in exchange for a tiny sliver of equity in the deal. Don't expect a big piece of the pie there, But even if you just get 1 or 2% or 3% or whatever of the deal for your efforts, that is huge because that gets your foot in the door. Again, that gives you a deal that you can feature. You can show people, hey, this is a deal that I was involved in. And you can say that with legitimacy, and then bring massive value to the table. Work your butt off to provide value for that active investor because this gets you going, and this gives you that proof of concept that you need. It reminds me of a client of mine a few years ago. Client Audie came on board, and he was kind of just getting started with real estate investing, and he was definitely wanting to switch gears. I think he'd done a deal or two before, but he wanted to get into the whole BRRRR strategy with small multifamily properties. But he had no clue, no experience with that, no track record with that. So it was going to be very difficult for him to raise capital. So I introduced him to some other clients of mine in his area who were already doing what he wanted to do. They ended up joining forces. Audie came onto the team, and instead of working for a salary, he worked for a piece of the action. And he did whatever needed to be done. He brought some skill sets to the table, but he was also really ready, willing, and able to roll up his sleeves, put on a hard hat, and shovel stuff out and sweep stuff out and do all this kind of manual labor that he wasn't really accustomed to, just to show that he was a team player. But by doing that, he got the experience, he got the track record, he ended up joining forces with those guys, and they became a really powerful team. So you can do the same thing. All right, and what do we do? Last but not least, if you are able to convince somebody like your mom or your spouse or somebody like that to put up the money for your first deal, then I'm going to recommend that you be extra generous with that person for taking a risk on you. I mean, think about it. If they're putting up tens of thousands of dollars in an unproven real estate investor like yourself that doesn't have a track record, they should get a bigger piece of the pie. So traditionally, if you're doing smaller deals and you're bringing the deal and the team and the experience to the table and your investors bringing the money, it's usually a 50-50 split. In this case, I recommend that you make the split much more in their favor. So instead of 50-50, maybe it's 70-30 in their favor, or maybe even 80-20 in their favor, even 90-10 in their favor. It doesn't matter because they are taking a big gamble on you. And you only have to do this for that first deal. Once you got this deal up and going, you've got it closed, you've got it going, it's working nicely, then you can move ahead, use that one as that case study, and raise capital for your future deals and do them at 50-50 or whatever an equitable split is. But you just want to get that, as my friend Barry McGuire says, that first damn deal done. That's what it's all about. Get that first deal, get that proof of concept, then move forward from there. All right, hopefully you found that helpful. If you're looking for more tips, tricks, and strategies that are proven to help you raise capital, go ahead, grab my book, Money Partner Formula. Check it out at investorattractionbook.com, or you can grab your copy by clicking on the link in the description below. Get yours today.